Hello everyone, I'm super happy to be here today with you for our first 2025 webinar. So if you're listening to this webinar live, we are happy to answer to your question. Please write that in the chat. And if not, we'll be willing to touch base after the session. Don't hesitate to contact us. And 2025 starts with a lot of debates around ESG. So we are starting this webinar with both the US politics, with Trump's that is a challenge for ESG and anyone's willing to participate into the fight against global warming and to the energy transition. And as well, in the EU, regulatory frameworks, and in particular CSRD, are not very welcome. A lot of debates are around the simplification of these frameworks. We can understand with these two news that we enter into a new era for ESG, an era of efficiency. And it's a super hard task because at the same time, more data have to be covered. More thematics enter into the scope of any sustainability investors. More regulation in the UK, for example, or in Australia. And the main 2035 risks are all environmental. So ESG data are useful, the stakes are higher, and the question anyone working in that space would have to be asked is how can you do more with less? So with that in mind, the technology is now super mandatory for any sustainability team. And we wanted to explore that with a new webinar format. So I'm super happy to receive Sylvain, who is the CEO and founder of SESAMm, leading controversies data provider. We have the unique occasion today to do a discussion in between two fintechs, two ESG practitioners, all working in the financial industry with a very different play. If you listen to this podcast, I understand that you probably know WeeFin, so I'll be very brief, but WeeFin is a software provider. We are helping financial institutions and we provide them a technology so that they can handle better ESG data internally. And you'll tell us that as well. Sylvain is a data provider, so you're using technology as well, but differently. So today is all about explaining you in details what are the challenges around ESG data, how can we overcome that with technology. So it's not a high-level statement education that we'll do today, but we'll try to go real and to give you as much information as required so that you can, on your side as well, very well understand the challenges. So Sylvain, I don't know if all the listener knows about SESAMm, so please introduce the company and yourself. It would be great.
I hope they do. Thanks a lot, Gregoire, and thanks to the WeeFin team for this invitation as well. So I'm Sylvain, I'm CEO and co-founder of SESAMm. Very briefly, SESAMm is a global leader in ESG controversy data. So what that means is we basically track ESG incidents on portfolio companies and also in the context of due diligence. Say an oil spill, for example, on a oil and gas company or corruption accusation. And a lot of scandals that we've heard in the different years, like Teleperformance and Orpea, etc., are things that we focus on. And SESAMm has one specificity, is we don't just cover listed assets, we also cover private assets. So we cover more than 5 million companies. And I think that's going to be quite interesting for the debate. And finally, just as a team, we're a team of around 100 people, active in all geographies, with business not just in Europe, but actually a large number of clients in the US as well, where some of these political discussions are particularly interesting at the moment. So maybe let's talk a bit about challenges. Very happy to see what the challenges are that you observe with investors, asset managers with regards to data, efficiency. And so very interesting to have WeeFin's view.
Yep, thanks, Sylvain. And yeah, it's not a political debate today, but I think the US situation is super interesting to discuss. We are seeing as well on our side a lot of discussion with the US players still willing to use ESG because actually it's super useful to better invest, but they have no occasion to communicate that as well as they used to do. And yeah, you're right. When you work with financial institutions, you know very well that you have a massive ESG data challenge when you want to handle all your ESG data sources. So if you listen to this webinar, the one thing you have to understand is that as an investor, if you are a big asset manager or a big financial institution, you will need to have multiple ESG data sources to invest. Several data sources. Why? First, because you need to cover a broad range of assets and geography. It's not the same to cover private assets in the US and public market in Europe or even Asian countries. You have to have a lot of range of indicators, controversies like SESAMm, ESG scores, carbon-specific data sets, or specific insights on companies that you really track and that you engage and that you want to follow very closely. So on average, our clients have more than 5 ESG data sources to cover all their needs. The highest number being 30. I don't know if it's something that you need to think of, but it creates a lot of challenges. Challenges because when you need to use all the different data sources, you have a data comparability issue and a question of the quality and the reliability. The comparability is interesting first. With all these ESG data providers, you have different methodologies, units, and periods of reporting. I think these are the 3 main challenges our clients will have, but there's more. So at the beginning of ESG, I remember the discussion, and a lot of people were like, "Oh, standardizations will come, and everything will be solved.
Ratings will converge."
Well, and everyone will use the same data."
Yeah.
And actually, the question on the methodology is interesting. Why would you have different methodologies for the same type of data sets or thematics? But it's normal because inside each source or data providers, you'll have the belief, the experience and the expertise of each data providers. For example, Air France, which is an airline provider, is to degree compliance for half of the data provider. They have assumptions that they are making on that because it's one of the best airlines in terms of what they do for climate. But for some others, it's not the case. And one could argue that if indeed an airline provider is not really in the scope of a 2-degree compliance world. So with that simple example, we can see that the methodology can change and that if you want to trust your data, if you want to use your data, then you'll need to deep dive in the methodology. So for us, that we are helping clients to handle multiple data providers, we have developed a lot of frameworks to compare these methodologies and to give the capacity to our clients to actually trust their sources. So I guess when you're a data provider, it's one of the challenges that you have to explain your methodology to your clients, to help them to trust your data sets and to use that, isn't it?
Yeah, indeed, and actually, I think that relates also to the notion of convergence. So at SESAMm, all of our methodologies are public, and so they can be accessed by clients, etc. And it's very detailed, like up to formulas directly. And there's another element, which is all of our data is transparent, and so that means people can get back to source content and understand where the controversy actually comes from, so they can actually change that. And you mentioned the notion of convergence, and at some point we all thought that ESG rating would converge in the same that credit ratings did, and that probably the correlation would increase. There were a lot of studies, etc. And that didn't really happen that could still happen. You know, there's the regulation coming with ESMA. SESAMm is actually part of EISRA, which is the Association of European Rating Agencies, so looking to be regulated by ESMA as well. And so there is a regulatory push in the background that could increase the convergence of rating, but it is far from done. And I'm not sure it's going to be as easy as for credit ratings. It's going to add new rules. It's going to increase overall the quality and transparency, but it doesn't necessarily mean that convergence will actually happen. So yeah, just one quick thing I wanted to mention.
Yeah, and I think in terms of convergence, there are two different types of data points. I think half of the data points are raw or technical data points. Let's say a carbon footprint, for example. It's hard to converge on the methodology of the carbon footprint, but it's probably a good thing that it will happen in the future. But for example, even for sovereign data, so for states, what we see in the data providers methodology is that actually you've got no convergence today regarding whether you should include the imported emission or not, whether you should include all the GHG gas in your methodology. Data providers disagree. So it has to converge at some stage, but it is a challenge. And on the other side, you've got the other type of data points, ratings, more broad data points, 2-degree scores, biodiversity scores. And in that, you've got more than technical data points. You've got an opinion, you've got ideas. Is nuclear something that is ESG compliant or not? Is a question that is answered differently by German investor and French investor. So as a software providers, we always have to adapt the type of calculations that we can make to the clients. And I think adaptation is really key for the coming years. People have realized that ESG is more complex than just the data points, and that the data sets that you have, software that you have, has to adapt to all the different contexts and the different views of ESG that you could have in Germany, in France, or in other countries.
Yeah, and I think you're very right in highlighting the difficulty of convergence. Also, if it is already difficult to converge on things like, say, carbon emissions, which normally have a ground truth, where if a methodology was standardized, there should be a single number. It's even more difficult on things that relate to a specific opinion, and controversy has that bias as well. I was speaking with one of our clients, ET Finance, as we provide data to rating agencies, so ET Finance, EMUG in Germany, Fitch as well. And they were saying, even in their team of analysts, sometimes controversies are assessed differently. So a controversy related to animal welfare, so say an accusation by PETA, which is a large NGO related to mistreatment of animals for food processing, would sometimes be viewed more severely by a German analyst than it would be by a French analyst. And sometimes it's even up to the individual conviction. And so even with the framework of methodologies, etc., there can be in some of these data sets a notion of opinion, which makes convergence very difficult.
Yeah, and the structure that I'm seeing more and more in sustainability team is actually that they will have a quantitative score that can be, for example, for the controversy, SESAMm or other providers, or internal. And after that quantitative score, they'll still have a qualitative opinion on companies. And sometimes it's super hard to put everything in your number. So they will have qualitative frameworks to assess whether the company will improve in the future, whether they trust the management, whether they think that they can actually influence the company so that they improve. And that will change their perception and their views on that. So what you said on the views of investors is interesting, is that you have like the scores and the data and the process on top of the data. And the top players that we are seeing in the sustainability world today on our side, the clients that are the most advanced, will have both a data framework that is super critical, an organization around ESG data, and as well processes that are super clear, workflow to validate the data or to use that better. I think being an investor that is handling sustainability today is not only about the data, but about how you will use it in practice, and having a robust framework on that. But I think you are challenged all the time on your own processes on how you would validate controversies, how you would do that. How can you help your clients to trust your data actually, and to help them understanding that the controversies that you are detecting or not detecting are the right one?
Yeah, definitely. So there are a lot of things that are specific to controversies. In terms of processes, we rely on a few things. Is first, we make sure that the methodology is the same for any type of asset. Small company, large company, any sector. That's actually fairly important, because there is a reason why investors have to rely on multiple data sources. It's not because it's fun, it's because they tend to have issues covering specific parts of the markets that they're investing in, whether it's because they need data in emerging countries or they need data in private assets, etc. And so that's one of the reasons why there's a multiplicity of data sources. And so by ensuring that we have the same methodology and the broadest coverage with across 5 million plus companies, that by itself is a way to help investors trust the methodology and get the data on everything that they need. We have a lot of different things. So our work with rating agencies is important in the sense that it gives us what we'd call, from a data science perspective, a gold corpus. So a ground truth as to how rating agencies evaluate controversies with our own data. And so with this back and forth and human in the loop, we're able to control the validity of the controversies and make sure that it's equivalent to the work of human analysts making decision and commentary on controversies. And then there are a lot of technical processes around data quality as well.
It's always a balance between technology and human intervention
Yeah.
in your space as well.
It is. And interestingly enough, we are mostly used in a qualitative way. And so the quality of data is sufficient for people to trust it, not just scores and quantitative processes, which I think before the era of generative AI was very difficult to do. Now we can really breach that gap between human interpretation and AI. But the methodology is established by human analysts, and there's still a human analyst QA that is necessary, especially on severe controversies. So we're doing a lot of work on that. And for us, there's another element which is critical, and that is transparency. Because another reason why people multiply the number of data sources is because they kind of don't trust it completely.
Yeah.
And most of the time it's because they are lacking transparency. So there's a lot of criticisms from some major rating agencies where it's, hey, I'm not sure where this score comes from, and I don't have full clarity on the methodology. And at SESAMm, though we rely a lot on AI, we allow investors to go to the source data very quickly so that they really understand how a decision has been made to escalate a controversy or to modify a score. And that level of transparency is quite important in the processes, and allows clients to really trust the data because they can control everything. That's a good thing too.
Yeah, I think the transparency is key, but given the size of the methodology that you need to read when you are an investor, sometimes you just don't have the time to read. I remember one of the main providers publishing hundreds of pages on his own methodology. So I think like the multiple sources challenges can be also a way to secure yourself, and to then, when you engage companies and then when you need to trust your data, have multiple confirmation of the information that you have. In the credit rating agencies, and you used that analogy just before, you have the same type of process where you use Fitch plus S&P plus Moody's to confirm the solvency of a particular issuer. And I wanted to touch base on what you just discussed about the quantitative and the qualitative team. In fact, it's interesting. If you look at ESG 10 years ago, I remember a fight in between quantitative ESG investors and qualitative ESG investors. And I can still name them, you know. They are very famous, and they discussed a lot about that. And now what I'm seeing is actually a convergence in between these two worlds. And the setup that I'm seeing the most is, and that is the most efficient, I believe, is actually a quantitative team plus a qualitative team. And typically, the quantitative teams will build the internal ESG scores, will use controversies data, climate data, biodiversity data, and create the views on each of the companies that you want to invest in. And then the qualitative team will review that, use the data, and then change sometimes the views of the companies, and because they have like a superior opinion thanks to their research and analysis. So at the beginning, people were thinking that technology would replace qualitative work and that it's a fight in between quantitative and qualitative, but now it's more about like how can the technology better improve the qualitative analysis that is done on the space.
Yeah, and we see the same setup actually, so at SESAMm we have two things. There's a controversy exposure score, which is a numerical score, so snapshots, time series, everything quantitative. I rapidly need to assess whether this company is above a certain level of risk, which could serve for exclusion or other topics. And then there's the granular data, which is individual incidents, so events and cases. And interestingly enough, we see qualitative teams moving to more quantitative frameworks, because a lot of the quantitative teams need to increase coverage. And so in order to increase coverage, they also need to move to more quantitative methods. They cannot increase coverage just by hiring millions of analysts. That doesn't work. And in the same way, we see that quantitative teams are challenging the data more and more, and so want to have these explanations behind the movement of a score. And so we have a lot of quant teams historically consuming just our scores data, who now also access like our dashboards in order to say, oh, okay, this is the controversy because I got a question from my investor, though it's a quantitative systematic fund. I still get a question as to why I made that decision. And so the qualitative data is interesting there.
Yeah, and we are seeing the same kind of trend. So at WeeFin, like the main part of our product is to build a data referential with all the different sources, but then we have interfaces for processes. And in these interfaces, more and more, we are seeing the combination of a qualitative process plus the quantitative data. In particular, the one thing that is super important, I believe, today in 2025 is to have not only the data, but the metadata on top of that. By metadata, I mean the dictionary on top of your data, the indicator on the quality of the scores and indicators that you have. And there is actually an expertise inside that quality score. So you have like technical data checks to perform on the data, like outliers and other stuff like that. But as well, you have methodological data checks to perform on the data, functional data checks. And we are more and more customizing that for clients because, and I believe it's a good trend actually, clients are more experts on the data. And because they want to trust their data providers and data sources, they want to customize the way they will actually control the data. For example, understanding that your GHG score should be calculated with all the different underlying sources, with reported data and not estimated data. And if it's an estimated data, then understanding how the data is estimated, etc. Do you have the same trend, and are you entering in such details with clients, or are they using you as a trust source, and so they will not focus on such details?
So in terms of quality, trust of data, etc., through the methodology, but also just through testing and through the validation that they get with our team of analysts, we don't get a lot of questions there. I think the main trend in terms of customization that we see and linking data sets to their workflows is in terms of the frameworks that we map to. So at SESAMm, we typically have like 50 different categories of risk, and clients ask us for specific frameworks of interest. So they say, okay, we need OECD breaches basically, or UN Global Compact, or we're interested, because we don't just do finance, we also do a supply chain, we're interested in devoir de vigilance in France or upcoming CS3D. And there is a trend towards clients actually having their own internal framework and wanting us to deliver the data on the pillars that are of interest to them, because they have their own materiality map, etc. And so we see a lot of customization in that segment. And there is that, also the reason for that underlying trend is that people also, and specifically for controversy, are looking for that convergence. And so with SESAMm, they often find a partner where they can do public assets, private assets, supply chain. They can do SAP under EBA regulation, CSDDD, etc. And under the condition that they can find the right sub-risks that correspond to the regulatory framework and to their workflow, they can address a lot of different business needs with the same data. And so that's the main request that we get, actually.
It's interesting what you were saying that your clients will use you for both the private world and the public world, which is not common actually. The strategy of cherry picking the right ESG data partner is always a challenge for investors, and when our clients are doing that, we are seeing typically this type of setups where you have like private space data providers and public space data providers, and if you can do both, sometimes it helps you to solve some challenges.
Yeah, my strong conviction is that it's not a choice that investors have. It's not something that they like to do. It's just that they have to, as they go to a very large provider, and large caps is okay, but then they have an issue with small caps. And so they go, for example, to our partner ET Finance on small caps and mid caps Europe, because they are the expert there. They have the highest quality of data. But then there's private assets. And so private assets, you don't have a lot of solutions. You have consultants, basically. And so they go to some of our clients like ERM or Ramble or ET Finance again in that space. But there's really that diversity of they have to choose different solutions because not a lot of solutions cover everything. And at SESAMm, for one specific segment, we don't do everything, but for one specific segment, we have the specificity of covering any type of assets, and that can be comfortable. But again, I think this is not a choice that investors are making, and they don't want to multiply data sets. It's something that they have to do because they have different business lines and asset types themselves.
What I believe is that there are good reasons to multiply your data providers and bad reasons. Coverage should be a bad reason, and sometimes you prefer someone to cover more in terms of market geography and other. But I think multiplying your data provider so that you can better trust the data and compare different methodologies, and then having your own opinion is a good way of thinking the multiplication of ESG data sources, or to have specialists in specific indicators like controversies, climate, biodiversity. These are all complex topics, and it's super hard to master everything. So for example, if you look at biodiversity, it's all done with estimated data, with physical data that are hard to find. So I understand that here, if you're not specialized, it's hard to do a very great job.
I really agree. And by the way, especially on public assets, we don't compete with rating agencies. We tend to be like the second layer of information.
Yeah.
And usually it's that matter of transparency and granularity of data. And I think that's an excellent practice in the industry where investors are looking to take control over the data and not just trust the exclusion of these companies because exclusion of these companies. No, they actually want to understand the why, get their own incremental data to be able to justify that to their own investor. I think that's an excellent trend. The more control investors have, the better.
Well, thanks a lot, Sylvain, for the insights, and I think we've discussed a broad range of topics on data. One other topic is the reporting, because most of the time, and it's a good thing, we are using the data to report to our investors, clients, and others, and this data has to be understood, read, and used to pick fund managers or to pick investments. I think it's the same thing that we discussed with the data regarding the reporting. At the beginning, people were thinking that reporting is going to be standardized and that it's going to be a solution inside the problem. And now people are more realistic. You have a lot of different standardized reports, SFDR, for example, SDR in the UK very soon. But you still have each investor's views. So what we are seeing as well in the reporting space is that you have two different challenges. The first challenge is about the reader education. We focused a lot on the content of the report, but actually, if you look at SFDR, most of the report are not well understood by who is supposed to read the report. And so we are seeing the complexity of the report as a challenge in the challenge, and that anyone willing to do a good report needs to educate actually the reader. But once the reader is educated, what we are seeing is that they are asking for actually more customization. And a standardized report is one thing, but they will need reports on the specific thematics and the specific indicators that matter to them. We talk about the German investor on the nuclear, and the French investors will have different views. And in Netherlands, water is a big issue, and you want more communication on that in particular. So I think that the technology in the reporting in particular will have to help, and that's what we are doing in the product, to adapt to each investor's use, to evolve when you have different frameworks that are created across time, and to answer to the specific questions asked by sophisticated clients. So I think the reporting is the next challenge in the coming year, and is going to be not what we thought at the beginning, not a standardized report and a challenge on the standardization, but more a challenge on the customization for each investor.
And I think the role that WeeFin is playing here is also super important, because getting from data to reporting is not necessarily easy. And just to take our examples, Control C, you can put them in a number of different situations. For reporting, it's typically for SFDR, PAI 10, and you're looking at breaches of the UN Global Compacts, which we provide as a type of data set. But going from there is an event that is a potential breach of the UN Global Compact to your SFDR report does take more than Control C data. It takes crossing multiple data sets. There's not just one PAI. And it takes a bit of work, actually. And so I think it's essential to have players like you that are bridging that gap as well. And we're seeing the number of demands in that regulatory space increasing. For us, Control C data historically is a very operational data set, so it's one that is used a lot for engagement, etc. But now it's UNGC violations, OECD violations, UNGP, ILOs, so there's a lot of things coming, and even more on the supply chain side, lots of new regulations, and yeah, I think bridging that gap is going to be essential.
Yeah, and you are back to the data challenge when you are talking about reporting and regulatory. You're right that PAIs are standardized indicators, but with a lot of customization that you can make in the indicator. We spent a lot of time with our clients to actually understand what is the best methodology, what are the assets that need to be covered, how you should design the formula. And so the standardization is not yet done inside the standardized indicator. So we will discuss that more, I think, in the future.
Well, good luck with it. I'm just taking PI 10. The rest I absolutely leave to you.
Yeah, we have for some of our clients, we have more than 5,000 indicators for each single company. So with that number, you need to deploy technology. You need to deploy systematic methods to control data. That's typically what we are doing in the platform.
And that's a great thing, is more data for more coverage, more frequent information. I think the industry is all moving in that direction. Doesn't mean necessarily that everything will be standardized and converging, but overall clients are more likely to be well covered for their need across all asset classes.
Well, thanks a lot, Sylvain.
Thank you very much.
We are at the end of our time. It was great to have you for the discussion. Hopefully, you listener had a good view on all the different challenges, how we are deploying technology today for that, and hopefully you'll be willing to tackle more of these ESG data challenges in the coming future. Thanks a lot, and hope the session was instructive to you.